So students, starting on with the next problem number 11. So problem number 10, I'll be sending you the notes. Please see to it. If there is any problem, if any doubt with that, you can ask me. That is similar to the problem which I have been solved in the previous class. I'll be sending you the question and answer both. Please see, and if you have any doubt, you can ask me. So I'll be going on with problem number 11. So here, that is Amit Oil Mills, Cochin consigned 2,500 kgs of castor oil to Madhu and Company, Varanasi. So here Amit Company is sending 2,500 kgs of castor oil to Madhu and Company. So consigner is Amit and Madhu and Company is consignee on 1/4/2012. So on what date he is sending? Amit is sending to Madhu on the date of 1/4/2012. So the cost of oil was 18 per kg. He is sending 2,500 kgs of castor oil. Each per kg of oil costs rupees 18. Next, full stop. The consignor paid 900 towards carriage, freight and insurance. So this is the expenses of consignor, which is non-recurring expenses. Non-recurring insurance in transit. During transit, 250 kg oil was accidentally destroyed in a transit. So here until here, so here what they are saying, in transit they have lost 250 kgs of castor oil, so which is an abnormal loss. Anything loss in transit can be considered as abnormal loss. So next, so he has lost 250 kgs of oil in the transit accidentally. So for which insurer paid 2,200 in full settlement of the claim. So here they are given for the loss, the insurance company is paying 2,200 rupees. So when they are given, the insurance company is, when they are given that insurance company has been given the money or the consignor has claimed for the money, it is known that you are supposed to prepare abnormal loss account. Here we have abnormal loss also, and insurance company is also paying. So when there is an abnormal loss, even if they are not asked, please make sure that you will be preparing abnormal loss account. Okay, understood? So 2,200 in full settlement of the claim directly to the consignor. Full stop. So next, Madhu and Company took delivery of the consignment on April 10th, 2012. So when, on what date they are taking the delivery? On April 10th, 2012, and accepted the bill drawn on the Amit Company Mills for 5,000 for 2 months. So they are saying they have been paid 5,000 rupees as advance in the form of bills. So they are paid the advance of 5,000 worth for 2 months. Full stop. On June 30th, 2012, Madhu and Company reported 1,750 kgs were sold at 25 per kg. So this is sales. On what days the sales they have been reported? So on June 30th, 2012, Madhu Company reported 1,750 kgs was sold for 25 per kg. The expenses of the consignee were 1,850 towards go down, rent, advertisement and salary. So these are all the recurring expenses of salaries of salesmen. So these are all the recurring expenses of consignee. Next, Madhu and Company charged a commission of 3% and 2% delivery commission. Here they are paying commission of 3% and delivery commission of 2%. So totally 5% of commission is payable on sales. Full stop. So Madhu and Company further reported the loss of 20 kg leakage in the godown. So that 20 kgs of leakage in the godown is considered as normal loss, because leakage is normal in case. So if there is an oil, means there is particularly some leakages will go on. So that leakage is considered as normal loss. Then prepare necessary ledger accounts in the books of consignor. So here they are asking to prepare the ledger accounts in the books of consignor. So what are all the accounts you are supposed to prepare? Consignment account, consignee's account, goods sent on consignment account, and also abnormal loss account. So next, coming on to the given, what and all they have been given here. So who is consignor? Amit. Consignee Madhu and Company. What they are consigned on 1/4. On what date they are consigned? Amit. On which date he has sent the goods to consignee? On 1/4/2012. What goods? How much of worth of goods he has been sent? 2,500 kgs at 18 per kg, that is 45,000. So consignor's expenses 900 towards carriage, insurance and freight, that is non-recurring expenses. Next is loss in transit 2020, that is 250 kgs, which is abnormal loss. So refunded by the insurance company as 2200. This will be showing only in abnormal loss account. Next is delivered goods on. So on what date the goods was received by consignee, that is on 10/4/2012. So advance has been paid worth of 5000. So sales on what date the sales report has been sent by consignee to consignor, that is 30/6/2012. On how much has been sales made by consignee, that is 1750 kgs at 25 per kg. The amount is 1750 into 25, that is 43,750. Next, expenses of consignee 180 rupees, 1850 rupees on go down rent, advertisement and salary, which is an recurring expenses. Next, commission 43,750, that is sales. 43,750 multiplied by 5%, that is 2,188. 3% of normal commission and 2% of del credit commission, totally 5%. Done. I hope you have been understood the given adjustment. So next year we are supposed to calculate the value of closing stock. In the last problem we did not calculate with the value of closing stock because the entire goods was sold, but here they are not said that the entire goods has been sold or something like that. So we are supposed to calculate the value of closing stock. So coming on to the value of closing stock, there is a format, you all know that. So that is calculation of value of closing stock. First thing, goods sent on consignment. How much of goods? 2,500 units of oil has been sent at 18 rupees each, that is 2,500 into 18, that is 43,000. So it is given in the, I have been done in the adjustment. I want you all to see that properly. Next, coming on to plus non-recurring expenses of consignor, that is carriage, freight and insurance 900. So here cost of goods in transit 2,500, 45,900. So there is no normal loss in the transit, but there is an abnormal loss in the transit. So there is a formula for calculating abnormal loss. So that is 45,900 multiplied by 250. That is what is lost in the transit. How much is lost in the transit divided by the goods value of, that is quantity of oil 22,500. So the value of abnormal losses, that is 45,090. The loss value quantity is 250. So next, coming on to cost of goods received by consignee, 2,500 minus 250, 2,250, and here this on the amount side 45,900 minus 44,590, that is 41,310. And then it's coming on to non-recurring expenses of consignee. There is no non-recurring expenses of consignee, so nothing, nil. So this is the cost of goods in go down. So and then there is also a normal loss in the go down worth of 20. So for the normal loss, will not be valuing that normal loss, so nothing, no value. So here next, the value when 2,250 minus 20 is 2,230. Next, on the other side the value will be same, so there is no abnormal loss in the go down, nil. So next, coming on to cost of goods available for sale, that is 2,230. The amount is 41,310. So here this is the value of unsold stock. Unsold stock, what is the formula for unsold stock? So that is cost of goods available for sale minus sales. So this is the cost of goods available for sale, this is the value of sales, that is 1,750. So the unsold stock will be, what is unsold stock? 4,000, that is 480. Next, calculating the value of this unsold stock. So what is the value of this unsold stock? Value of unsold stock, formula for calculating value of unsold stock is cost of goods available for sale multiplied by quantity of goods unsold divided by quantity of goods available for sale. So the cost of goods available for sale is 41,310 multiplied by units unsold 4,480 divided by quantity of goods unsold 2,230. The value of unsold goods is 8,892. Hope you have been understood with this. So next, coming on to what you are supposed to prepare. So next we are supposed to prepare ledger accounts in the books of consignor. So what are all ledger accounts? One is consignment account, next is consignee account, goods sent on consignment account, and yes, that is abnormal loss account. So here you are supposed to prepare date also, as they have been mentioned with the dates. Make sure you will be properly writing on the dates. If the dates has been not given in the question, there is no need for writing, but here they mentioned the dates also, so make sure you will be writing that properly. So here next coming on to what are all the items which will be debiting in the consignment account. So on what date the goods has been sent to the consignee by consigner? On 1/4/2012, right? So that is 2 goods sent on consignment 45,000. So next is on 1/4/2012. So that is expenses incurred by the consigner to bank account. So that's 900 to Madhu and company account, that is expenses of consignee. You can ask why is that 36/2012? So that is on that day itself you have sent the account of report. So on what dates you have sent the reports, that day will be considered. So next for that, what is the amount of expenses of consignee? 1,850. So next Madhu and company, this is commission of consignee, so date is same. So how much is the commission? 2,188. So this is the balancing figure, I'll talk to it later. So next coming on to the credit side. So what are all the things we will be preparing, recording on it credit side? First is abnormal loss. Here I have been written as abnormal loss. So in the question they have been mentioned for the date of abnormal loss. So that date is 10/4/2012 by abnormal loss. What is the abnormal loss? 45,960. That is the value of abnormal loss. You have been calculated the value of abnormal loss, that is that is not 45,000, that is 4,590. So next coming on to, that is sales reported by consignee. What is the sales reported by consignee? He has sold 1,750 kgs of oil for 25 each. The value will be 43,750. On what date the account of sale has been sent, that will be considered, that is 36/2012. So next is closing stock. So what is the value of closing stock with the consignee? They have been calculated. So by consignment stock account 88,892 will be considering the value of account sale will as only that for stock, that is closing stock. So here the credit side is more than the debit side, so that is a profit on consignment. That is the last date which we know will be recording that 36/2012 to profit and loss account balancing figure, that is profit on consignment 7,294. So next coming on to consignee's account. What and all will be recording in this consignee's account on the credit side? That is by bills receivable. So he has paid the advance. So this is the advance value. He has paid by advance, right? So that is 500. Consignment account expenses by consignment account 2,188. So on the credit side, sales reported by the consignee to consignment account 43,750. So next, that is debit side is more than the credit side. So by bank account balancing figure, this is the final settlement to be made by the consignee, that is 34,712. So next coming on to goods sent on consignment account. In goods sent on consignment account, we'll be recording only 2 items. On the credit side, on the date what and all goods has been sent, of what value we'll be recording, that is 45,000. 45,000. So this is credit side. On the debit side, the last date we'll be writing 36/2012 to trading account. That means we are transferring the value of consignment. Any goods sent on consignment should be recorded in trading account. So while preparing trading account, that is trading profit and loss account, we'll be recording in trading account. So that should be transferred to trading account 45,000. So next coming on to, as I said earlier, we are supposed to prepare the abnormal loss account. So here see the abnormal loss account. So we know the abnormal loss, we can write with that date, that is 10/4/2012. So on abnormal loss, I don't know about the insurance, we know only what is the abnormal loss. So to consignment account 4,590, that is the loss, that is the abnormal loss. You will not be recording any normal loss over here, will be recording only abnormal loss here. To consignment account 4,590. So on the credit side, insurance company has paid worth of rupees 2,200 rupees, right? So we are supposed to record that by insurance company account 2,200. So the remaining balancing figure value will be given by the company's profit. So by 23,900, that is a loss for the company. So by profit and loss account balancing figure 23,090. So here 4,590. So this much is about the problem number 11. Hope you have been understood. Please, if you have any doubts, ask me. Thank you.